The Commodity Exchange Incorporated COMEX, based in New York City, has been a central institution for the trading of precious metals like gold and silver for decades. Historically, the COMEX vaults have held significant amounts of physical precious metals, acting as a vital store of wealth and a barometer of the global economy. The silver and gold stored in these vaults were often seen not just as financial instruments, but as critical components in various industries. However, starting from 2020, the COMEX silver inventory began a rapid and dramatic decline, with over 70% of its stockpile being depleted within just a few years. This reduction has had far-reaching implications for industries that rely heavily on silver, particularly the semiconductor sector. To understand the implications of this depletion, it is essential to first examine the context in which it occurred. Silver, a key industrial metal, is used in a wide range of products, from solar panels to electrical contacts, batteries, and most notably, semiconductors. With its excellent conductivity properties, silver is indispensable in the production of microchips. But the drop in silver reserves at COMEX does not exist in a vacuum. The rapid decline in inventory is a part of a broader trend, influenced by global supply chain issues, geopolitical tensions, and surging demand from industries like electronics, renewable energy, and more recently, electric vehicles. From 2020 to 2023, the COMEX vaults lost over 210 million ounces of silver, shrinking from a high of around 300 million ounces to just under 90 million ounces by 2023. This is a staggering 70% drop in the vault's inventory, a reduction that not only highlights a massive shift in the precious metals market, but also reveals how interconnected global supply chains have become in the 21st century. The main driving force behind the depletion of these reserves is an ever-increasing demand for silver in industries that rely heavily on its conductive properties. The global semiconductor industry, which saw demand skyrocket during the COVID-19 pandemic, is one of the primary sectors affected by this depletion. As people turn to remote work, the demand for personal computers, tablets, and smartphones surged, along with the need for more efficient and powerful microchips. Additionally, the global shift towards electric vehicles, EVs, which also rely heavily on semiconductor chips, further strained the supply of critical materials like silver. With silver being a key material in chip manufacturing, the tightening of global silver supplies directly impacts the availability and cost of semiconductors. The semiconductor shortage that began in 2020 and has continued through to the present day can be traced back to these supply chain disruptions. The shortage initially stemmed from factory shutdowns in Asia, which caused delays in chip production. But the problem deepened as the demand for chips continued to outpace production capabilities, particularly in the automotive sector, where chips are critical for vehicle electronics, as well as in consumer electronics. As the supply of silver, a vital component of semiconductor production, has been reduced, the cost of manufacturing these chips has risen, creating a ripple effect across the global economy. At the same time, geopolitical factors have exacerbated these supply chain challenges. With tensions rising in various parts of the world, such as between the US and China, the US has increasingly looked to secure its own supply of critical materials, including silver. The US government has recognized the strategic importance of securing access to such metals, particularly as its dependence on semiconductors grows. As tensions continue to rise, global trade and logistics have been disrupted, with precious metals like silver increasingly difficult to acquire. In addition to geopolitical instability, the rise in the price of silver has also had significant economic consequences. Silver prices, which had been relatively stable for decades, began to climb sharply in the wake of the depletion of COMEX reserves. This increase in price was driven not only by supply shortages, but also by the rising demand for silver in emerging technologies like solar power, electric vehicles, and energy storage systems. Silver is a key component in solar panels, with an average solar panel using around 20 grams of silver. As the world increasingly shifts toward renewable energy sources, the demand for silver and solar technology has further strained global supplies. The impact of the depletion of COMEX silver reserves on the semiconductor industry is particularly pronounced. The United States, which represents nearly half of the global semiconductor demand, has been hit hard by these shortages. According to a report by the Semiconductor Industry Association, SIA, the U.S. accounts for roughly 47% of global semiconductor demand, yet domestic production has struggled to meet the growing needs. The shortage of precious metals like silver, along with other raw materials, has pushed up the cost of manufacturing semiconductors, slowing down production and leading to delays in bringing new technology to market. The repercussions of these shortages are widespread, not only in the tech industry, but across a variety of sectors. The automotive industry, which has increasingly relied on semiconductors for electric vehicle production, is one of the hardest hit sectors. EV production has been delayed due to the lack of chips, which has slowed the transition to greener technologies. Similarly, industries such as defense, telecommunications, and healthcare, all of which rely on advanced semiconductor-based technologies, are also facing disruptions. As the depletion of COMEX silver reserves continues, the market has become more volatile. The shrinking inventory has created a feedback loop of rising prices and increasing scarcity, with industrial users of silver forced to pay higher prices for the metal, which in turn increases the cost of the products that rely on it. The volatility of the silver market, driven by the depletion of COMEX reserves, is expected to continue for the foreseeable future, with industrial sectors that depend on the metal having to navigate this uncertain landscape. The reduction in COMEX vaults has not only created turbulence within the precious metals market, but has also exposed the vulnerabilities within global manufacturing networks. The direct consequences for industries like semiconductors, which rely heavily on silver, are compounded by broader economic forces. One of the primary concerns now is the escalating cost of production across various sectors, resulting from the scarcity of key materials, including silver. As demand for silver continues to rise and inventories continue to dwindle, industries that depend on it are facing an uphill battle. The increased cost of manufacturing semiconductors has had profound implications not only for the electronics industry, but for entire global supply chains. Microchips, which are the backbone of modern technology, are integral to everything from personal gadgets to military equipment and infrastructure. As the supply of silver shrinks, semiconductor manufacturers are forced to make difficult decisions. They may need to reduce the number of chips they produce, delay deliveries, or even increase prices, which would ultimately be passed on to consumers. This dynamic has led to further inflationary pressure in the global economy. The prices of everything from consumer electronics to automobiles, which rely heavily on semiconductors, have seen noticeable increases. In the automotive sector alone, the shortage of semiconductors has cost the global industry billions of dollars in lost production. This disruption has been particularly significant in the United States, where the automotive industry is a major part of the economy. A shortage of semiconductors has led to slower production rates and higher prices for new cars, amplifying the effects of the ongoing inflationary pressures that have been felt across the U.S. economy. In the energy sector, the increasing demand for silver due to its use in renewable energy technologies has exacerbated the supply strain. Solar panels, wind turbines, and energy storage systems, which are central to the transition to green energy, all rely on silver. Solar panel production alone consumes about 8% of global silver demand annually. As governments around the world set more ambitious renewable energy targets, this demand will only continue to rise. The depletion of silver stocks at COMEX could create a bottleneck in the green energy transition, with silver shortages potentially delaying the rollout of solar projects or increasing their costs. This creates a complex paradox. The shortage of silver, which is essential for clean energy technologies, could slow down the global shift towards a more sustainable future. This scarcity has also begun to influence the global geopolitical landscape. Countries that are rich in silver reserves, particularly in Latin America, have started to realize the strategic importance of controlling these resources. Mexico, the world's largest producer of silver, has already seen a rise in the price of silver, which has prompted its government to take a more active role in managing silver production. As countries look to secure access to critical materials like silver, the global competition for these resources could intensify, potentially leading to trade conflicts and even resource-based tensions. In addition to the political and economic dimensions, the depletion of COMEX vaults also raises concerns about the future stability of the financial markets. COMEX is not only a physical storehouse for silver, but also a key player in the futures markets, where precious metals are bought and sold in anticipation of future prices. As the amount of physical silver in COMEX vaults continues to shrink, the ability of COMEX to fulfill futures contracts may come into question. This could create a ripple effect across the global financial markets, as investors and traders might fear that the COMEX system could become unstable. Such instability could lead to increased volatility in silver prices and, more broadly, in the precious metals markets. In light of these developments, governments and industries alike are seeking solutions to address the diminishing silver reserves. One potential response is to increase domestic silver mining operations, particularly in the United States. The U.S. has been exploring ways to boost its domestic supply of critical materials, including silver, by investing in exploration and extraction projects. However, the timeline for these efforts to bear fruit is long, and the gap between the depletion of COMEX reserves and the ramp-up of domestic mining could continue to strain industries that rely on silver in the short term. As the situation unfolds, the semiconductor industry is faced with a critical challenge. In the U.S., the government has already taken steps to alleviate the semiconductor shortage by passing the CHIPS Act, which aims to incentivize domestic chip production. However, This legislation alone may not be enough to address the underlying issue of raw material scarcity, especially in the case of silver. The U.S. will need to find ways to secure reliable access to silver and other precious metals in order to sustain its technological advancement and manufacturing capabilities. The depletion of COMEX reserves also highlights the broader implications for the global economy, particularly in how critical materials are sourced, allocated, and traded. The reliance on global markets for materials like silver has exposed the fragility of supply chains that stretch across multiple continents. With geopolitical tensions rising, trade routes being disrupted, and resource competition increasing, the world is facing a new economic reality where access to essential materials is no longer guaranteed. In the context of global trade, the tightening of COMEX reserves signals a shift in how nations and corporations will approach their long-term strategic planning. The growing scarcity of silver is pushing countries and industries to rethink their dependency on centralized markets like COMEX. For the U.S., the implications are clear. To remain competitive in technology and manufacturing, it must secure a stable supply of critical metals like silver. This may involve not only increasing domestic production, but also forging new international alliances and trade agreements that ensure access to these resources. Moreover, the ripple effects of the silver shortage are already being felt beyond the semiconductor and technology sectors. Industries such as defense, telecommunications, and healthcare, all of which depend on advanced semiconductors, are now facing the consequences of the dwindling silver supply. The healthcare sector in particular, which uses semiconductors in everything from diagnostic equipment to medical devices, may experience higher costs and delays in the production of essential medical technologies. As we look toward the future, it is clear that the depletion of COMEX vaults will continue to have significant consequences for industries that rely on silver. The shortage of precious metals, particularly silver, is no longer just an issue for investors or the precious metals market. It is now a fundamental challenge for global manufacturing and technological development. In order to mitigate these effects, industries will need to find new ways to adapt, whether through increased recycling of silver, investment in alternative materials, or innovations in manufacturing processes. As industries scramble to adapt to the depletion of COMEX vaults, alternative solutions are being explored, but these come with their own set of challenges. One promising avenue is the increasing focus on recycling silver, which could provide a more sustainable and long-term solution to the growing demand. Silver, unlike some other precious metals, is highly recyclable, and much of it remains in circulation in the form of electronic waste. In fact, over 50% of the annual demand for silver comes from recycled sources. However, the recycling process itself is not without challenges. The quality of recycled silver is often lower than newly mined silver, and the technology to extract silver from electronic waste is still developing. While silver recycling can help alleviate some pressure, it is unlikely to replace the need for mined silver entirely in the near future, especially as demand for the metal continues to climb. The potential for new mining operations to fill the gap left by the depletion of COMEX vaults is another area of interest. The U.S. has begun to take steps toward increasing its domestic mining capacity, particularly in states like Nevada, which have rich deposits of silver. The government has shown support for domestic mining through policies that incentivize exploration and extraction. However, these projects face significant hurdles, from environmental concerns to the time required to bring new mines online. Opening new silver mines is a complex process that involves extensive geological surveys, permitting, and infrastructure development. Even if these efforts were successful, they would not provide an immediate solution to the shortfall in silver supplies. As a result, the U.S. and other countries are likely to remain dependent on international sources of silver for the foreseeable future. This dependence on international silver sources has heightened the geopolitical dimension of the issue. The global market for silver is dominated by a handful of countries, including Mexico, Peru, and China. While these countries have historically been the largest producers of silver, the competition for access to silver resources is intensifying. Geopolitical tensions, particularly between the U.S. and China, have made it more difficult to secure stable access to critical materials. As trade wars and sanctions increase, countries like the U.S. are looking for ways to reduce their reliance on foreign sources of silver and other key materials. This has led to a renewed focus on developing domestic sources of silver and forging new trade partnerships with countries that possess these resources. Another potential solution to the supply chain challenges created by the silver shortage is the development of alternative materials that can replace silver in some applications. Research into alternatives to silver in semiconductor manufacturing is already underway, with some promising results. Materials such as copper, aluminum, and graphene have been explored as potential substitutes for silver in electronics. However, These materials often have their own limitations, such as lower conductivity or higher production costs. Silver remains the most efficient and cost-effective material for many applications in the semiconductor industry, making it difficult to find suitable replacements in the short term. In the longer term, technological advancements in semiconductor manufacturing could reduce the overall amount of silver required per chip. For example, new methods for producing smaller, more efficient microchips could potentially reduce the amount of silver needed in the production process. However, these advancements are still in the experimental phase and may take years before they are implemented on a large scale. The ongoing depletion of COMEX silver reserves, combined with the increasing demand from industries like semiconductors and renewable energy, has created a perfect storm for the precious metals market. As silver supplies dwindle and prices continue to rise, industries that rely on the metal will face difficult choices. Manufacturers will have to contend with rising production costs, supply chain disruptions, and, in some cases, the inability to secure enough silver to meet demand. For consumers, this could mean higher prices for a wide range of products, from electronics to cars to solar panels. The broader economic impact of the silver shortage is also significant. As industries struggle to secure the materials they need, inflationary pressures are likely to continue. The semiconductor shortage, which has already cost the global economy billions of dollars, will likely continue to have ripple effects across the economy, particularly in sectors that are reliant on chip-based technologies. For example, the automotive industry, which is undergoing a major transition to electric vehicles, could see delays in production as semiconductor shortages persist. The same is true for the renewable energy sector, where solar panel production could be delayed or made more expensive due to the rising cost of silver. In addition to the direct economic impact, the depletion of COMEX silver reserves could also have geopolitical ramifications. As countries compete for access to critical materials like silver, the potential for conflict over resources could increase. Nations with large silver reserves, such as Mexico and Peru, may become more influential in global trade discussions as their resources become even more valuable. For the U.S., securing a stable supply of silver and other key materials will be a critical priority in the years ahead, particularly as technological advancements continue to drive demand for these resources. Looking forward, it is clear that the depletion of COMEX silver reserves is a complex issue that will require coordinated efforts across industries and governments to address. While there are no easy solutions, the situation has highlighted the fragility of global supply chains and the critical importance of securing access to essential materials. The semiconductor industry, in particular, will need to adapt to these new realities by investing in alternative materials, increasing recycling efforts, and exploring new technologies that reduce the reliance on silver. At the same time, governments must continue to invest in domestic mining operations and build stronger trade relationships with countries that control vital resources. As the depletion of COMEX silver reserves continues to unfold, industries and governments around the world will need to adapt to a new reality in which the availability of critical materials is no longer guaranteed. The impact of this shortage will be felt across the global economy, and its full consequences are still yet to be fully understood. However, one thing is clear: the depletion of COMEX silver reserves marks the beginning of a new phase in the global precious metals market, one that will reshape industries, economies, and geopolitics for years to come. The depletion of COMEX silver reserves, which has reduced the vault's stock by more than 70% since 2020, underscores a critical vulnerability in the global economy. While silver is only one component of a much larger and more complex supply chain, its role in modern technology, particularly semiconductors, amplifies the consequences of this shortage. As industries worldwide scramble to secure their access to silver, the risks associated with a limited supply of this essential metal are becoming ever more evident. The immediate future will likely see continued volatility in the silver market, driven not only by supply and demand dynamics, but also by geopolitical tensions and economic uncertainties. The longer-term effects on American semiconductor production are undeniable. The U.S. must grapple with the realization that its reliance on precious metals like silver is no longer sustainable in the context of a rapidly evolving technological landscape. As the semiconductor industry is at the core of this issue, the strain on supply chains caused by the depletion of COMEX reserves is a clear warning that the global approach to securing critical materials needs urgent reevaluation. While the U.S. government has implemented some measures, such as the CHIPS Act, to encourage domestic semiconductor manufacturing, the issue of raw material scarcity extends beyond chips. The impact of silver shortages is reverberating across industries from electronics and automotive manufacturing to renewable energy technologies. The reality is that the technology-driven economy of the future will face significant obstacles if the availability of key resources like silver is not ensured. In response, countries and industries are beginning to pivot towards greater domestic production of these materials. The US is starting to look more seriously at mining silver and other precious metals within its borders. However, as previously noted, mining is a long-term solution that is not capable of meeting the urgent demand in the short term. Recycling efforts, while helpful, are similarly constrained by the limitations of current technology, and while alternative materials are being explored, such as copper or graphene, no viable substitute for silver currently exists that matches its performance and cost-effectiveness in semiconductor production. The broader economic ramifications are already starting to unfold. As silver prices climb due to scarcity, manufacturing costs across industries reliant on semiconductors, such as automotive and electronics, are increasing, which could result in higher prices for consumers. This inflationary pressure adds to the existing strain on global supply chains, contributing to a scenario where basic consumer goods and advanced technologies become less affordable and less accessible to the average person. As silver continues to become more expensive and harder to acquire, the pressure on manufacturers will only intensify. The semiconductor shortage has already disrupted industries that depend on chip-based technologies, leading to delays in production and a slowdown in the rollout of critical innovations. For the U.S., this represents a challenge not only for its technological sector, but also for its geopolitical standing. Securing a stable supply of silver will be vital for maintaining global competitiveness in industries that are key to national security, such as defense technologies, communications, and the burgeoning electric vehicle market. The depletion of COMEX silver reserves could also catalyze shifts in global trade patterns, as countries with access to silver-rich resources, like Mexico and Peru, could see their geopolitical importance rise. The competition for these metals will likely increase, adding another layer of complexity to international relations. Countries that possess large silver reserves may leverage these resources for economic and political advantage, further disrupting global supply chains. The silver shortage has brought to light the fragility of the global economy's reliance on precious metals and the long-term sustainability of current supply models. It is no longer a question of simply managing the demand for silver in specific industries. It is about rethinking how to build resilient, diversified supply chains that are not as vulnerable to volatility in commodity markets. Ultimately, the depletion of COMEX reserves highlights an urgent need for systemic change. If the world is to continue advancing technologically and economically, securing a steady supply of critical raw materials, particularly silver, must be a priority. This could involve a concerted effort from governments, industries, and international organizations to foster long-term sustainability in mining, recycling, and material innovation. The global economy is at a crossroads, and the decisions made today regarding the management of resources like silver will shape the future trajectory of industries, trade, and international relations for years to come. As we look ahead, the depletion of COMEX silver reserves is not just a fleeting issue. It is a reflection of deeper structural challenges within the global economic system, challenges that will require thoughtful, coordinated solutions to address. The silver crisis has the potential to trigger a new era of resource management, one that prioritizes the security and sustainability of critical materials. Whether or not the world can navigate this challenge will depend on its ability to adapt to the changing demands of a rapidly evolving technological landscape. In conclusion, the depletion of COMEX silver reserves serves as a stark reminder of the interconnectedness of global markets and the fragile nature of supply chains that support the technology-driven economy. The semiconductor industry is at the heart of this crisis, but the ripple effects will be felt across a wide range of sectors. While immediate solutions may be difficult to implement, the lessons learned from this situation could pave the way for a more resilient and sustainable approach to securing critical materials in the future. How the U.S. and other nations respond to this challenge will determine their ability to maintain their competitive edge in the global economy and secure access to the resources that are essential for progress.